The meeting between President Donald Trump and Russian President Vladimir Putin at an American military base in Anchorage, Alaska, ended with no apparent resolution to the war in Ukraine.
Trump's recent meeting with Vladimir Putin has sparked intense discussions about its potential impact on the U.S. economy and major American companies. Analysts are warning that any new trade or defense agreements resulting from this meeting could shift global market dynamics, placing pressure on industries ranging from defense contractors like Lockheed Martin and Raytheon to energy giants such as ExxonMobil and Chevron, as well as technology firms with international supply chains like Apple and Microsoft. The possibility of eased sanctions on Russia could create tougher competition for U.S. energy exports, while changes in defense procurement priorities might redirect billions away from certain contractors. Investors are watching closely, as even subtle geopolitical shifts from this high-profile meeting could translate into major stock market volatility and long-term revenue challenges for key U.S. sectors. If you want to keep track of these crucial developments and their real-world business consequences, make sure to subscribe so you don't miss our in-depth coverage. Following the high-profile meeting between Donald Trump and Vladimir Putin, the economic ripple effects on several major U.S. companies could be significant, especially if certain policy shifts or agreements take place behind closed doors. Defense contractors are among the most vulnerable, as any change in U.S.-Russia relations that reduces perceived military tension could lead to a cutback in defense spending or alter procurement priorities. Companies like Lockheed Martin, Raytheon Technologies, Northrop Grumman, and General Dynamics currently rely heavily on government contracts tied to defense projects aimed at countering Russian influence. If those contracts are reduced or delayed due to a shift toward diplomatic cooperation, these companies could see billions wiped off future revenue projections. Stock prices for these firms often react quickly to geopolitical changes, and investors may anticipate a slowdown in new weapons development orders, missile defense systems, and military technology projects, potentially triggering sell-offs and lowering market confidence. In the energy sector, oil and gas giants such as ExxonMobil, Chevron, and ConocoPhillips face the risk of intensified competition if the U.S. moves toward lifting or easing certain sanctions on Russia. Russian oil and gas producers, such as Gazprom and Rosneft, could gain greater access to global markets, especially in Europe and Asia, potentially undercutting U.S. exports. This would not only push down global oil prices, but also squeeze profit margins for American energy companies, forcing them to reassess international investment strategies and production targets. The liquefied natural gas market could also see a shift, with Russia competing more aggressively for contracts that U.S. companies have been eyeing for years. Technology companies with extensive international operations, such as Apple, Microsoft, and even semiconductor producers like Intel and NVIDIA could also be indirectly affected. If new trade routes or cooperation agreements between Russia and certain allied nations lead to changes in tariffs, supply chains, or cybersecurity regulations, it could disrupt the smooth flow of technology exports or increase operational risks. Furthermore, if U.S. policy softens toward Russia, there could be a reduction in certain sanctions that currently limit Russian tech companies from competing directly with American firms, introducing new competition in software, hardware, and cloud services. The financial sector is not immune either. Banks such as J.P. Morgan Chase, Citigroup, and Goldman Sachs could face increased volatility in foreign exchange markets and global investment flows. Any perceived instability in U.S. foreign policy or shifting alliances could cause fluctuations in investor confidence, leading to sudden capital movements and higher risks for investment portfolios linked to defense, energy, or Eastern European markets. Additionally, if sanctions are lifted, there could be new opportunities for U.S. banks in Russia, but this would come with heightened geopolitical risk and potential public backlash, impacting reputational stability. Agricultural exporters could also feel the pressure if Russia strengthens its trade partnerships and offers cheaper alternatives to U.S. crops in key markets. Companies like Cargill, Archer Daniels Midland and Tyson Foods may face reduced demand overseas if Russia ramps up its agricultural output and secures new export agreements. Overall, while some sectors might find limited opportunities in a warmer US-Russia relationship, the broader economic picture carries high uncertainty, with industries tied to defense, energy, technology, and global finance standing to lose the most if market conditions, trade flows, and competitive landscapes change in the wake of this meeting. The long-term effects will depend on how much policy actually shifts versus how much is simply political theater. But even the perception of changing alliances can disrupt corporate strategies and investor sentiment for years to come. At the end of the day, the meeting between Trump and Putin may seem like just another political event on the global stage. But for the companies tied to defense, energy, technology, agriculture, and finance, the stakes are far greater than most people realize. A handshake, a policy shift, or even a subtle change in tone could send ripples through stock markets, alter billion-dollar contracts, and reshape the competitive landscape for years to come. While some may welcome the idea of reduced tensions, others know that peace in politics can mean turbulence in profits, and the companies that have built their business models around existing geopolitical realities may find themselves scrambling to adapt. Whether these changes happen slowly or strike like an economic shockwave, one thing is certain. Business leaders, investors, and even everyday workers will be watching closely, because the effects will not stay confined to boardrooms or trading floors. They will filter down into jobs, wages, prices, and the overall health of the economy. If you want to stay ahead of these developments and truly understand how global politics shapes your financial future, make sure you hit that subscribe button, because we'll keep breaking down the stories others only scratch the surface of.